Working from a remote location, hedging your investments with some defense, and commission-free ETF trading. These are just some of the topics we're going to cover on today's program. Hi there, everybody. I'm DeLegge with ETFguide. It's great to have you with us. Before we get into all of this, be sure to subscribe to ETFguide TV. And don't miss our weekly original content series. We've got ETF battles. We've also got the portfolio report card. Nobody comes close to the high level and caliber of programming that we throw at you. And don't be afraid to hit the comment section below. We'd love to hear from you. So today we're pleased to have with us Dave Mazza, Head of Product at Direction Investments. Dave, it's great to have you with us.
Hey, thanks for having me today.
So let's start with something that's on the top of a lot of people's minds, and that is the fact that we almost know who the next U.S. president's going to be, and everybody can sort of relax. But that doesn't mean we should let our guard down as investors. We're still living in the midst of a pandemic. So what are some things that investors should be focused on right now?
Yeah, that's absolutely right. So we're potentially nearing the end of a presidential election that was probably anticipated for years. And at this point, we're gaining some certainty that likely we'll see a Democrat in the White House paired with a Republican Senate and a Democratic-controlled Congress. So what does that all mean? Markets seem to like it because that means potential for gridlock, potential that we're not going to see some of the sweeping changes that a blue wave could bring. And what that means for investors is we do still need to stay on our toes, though. For in our leverage and inverse business, we're seeing a lot of activity as traders try to position their portfolios in the near term here at some of the areas that are potentially going to do well and do poorly. But for long-term investors, we do, to your point, need to take a step back and say, hold on here. If you actually look at the data, who's in the office, regardless of presidential party, doesn't matter much. What matters more is what's happening in the backdrop. And that's why we think we're in an environment where there's some longer term themes in this fourth industrial revolution that actually are going to drive returns going forward, as opposed to the day-to-day swings that we're seeing based off of the election results.
I'm glad you mentioned themes because that's a really easy way to segregate our investment ideas and match them up and pair them up with what's coming. And investors have really gravitated to that end, to the work from home ETF, that's ticker symbol WFH. They've been pouring money into this fund, and its assets have ballooned to almost 150 million. And it's also the lowest cost offering among funds capturing this trend. So what does the fund own and how has it performed?
Yeah, work from home is offered at 45 basis points. It's really intended to capture the long-term trend toward companies embracing remote work. Now, we know the COVID-19 pandemic has accelerated the number of individuals and companies who are working remotely or in hybrid models. But really what this fund owns is 40 stocks, so relatively concentrated, but in 4 different areas with 10 stocks from each. So you're going to get the 10 stocks from in cloud technology that are powering work from home. You're getting the 10 stocks in cybersecurity, helping keep all of that data safe that's on the cloud. And then importantly, there's 10 stocks from online project and document management and 10 from remote communications. I consider those 2 pillars really what we use to communicate with our colleagues, communicate with our peers when we are working in disparate locations. So again, work from home, investors have embraced it, really intended to be a long-term satellite holding for investors looking to take advantage of these names that are at the forefront of societal change.
Now, another theme is the connected consumer theme. You've got ticker symbol CCON for that. And this is another mega trend, like the remote work trend. This idea of connected consumers digitally being connected. This was a trend that was already well underway even before coronavirus struck. So talk a little bit about CCON. The pandemic has obviously accelerated this trend. What does the fund own and how has it been doing?
Yeah, CCON's actually done exceptionally well performance-wise relative to broader indices, whether it's the S&P 500 or NASDAQ, since it was launched at the end of August. And really what CCON is all about, similarly constructed to the work-from-home ETF, 40 stocks, from 10 stocks from 4 pillars. But to your point, it's really capturing how our lives have evolved outside of work. So what we do there is pair up 10 home entertainment stocks. So these include video games stocks and the like, along with 10 stocks in virtual and digital connectivity. So that's your social media companies. And then two trends that are a little bit earlier in their adoption cycle, but probably more important than those other two more obvious ones. One of those being remote health and well-being. The poster child for that is Peloton. Recently released some gangbuster earnings, seeing year-over-year revenue growth of over 230% as more and more folks embrace the ability to work out at homes and stay healthy at homes, as opposed to going to a gym and schlepping in your car or subway, however you get there. And lastly, the last pillar is online education. Online education is an area that's not just being embraced by students from kindergarten to high school, but also at colleges, and also for folks who might need to learn new skills or upskill themselves in an evolving economy. So CCON is a really great portfolio and exposure for investors who are looking to get access to those companies, again, at the forefront of another societal change that we're seeing every day.
Yeah, this has impacted all of us. I know my gym membership, I had to let that expire because here in California, the gyms have been closed. So This is forcing people to change their routines, wellness, health, obviously that too coming. There's going to be more people doing remote visits with their doctors, and we're seeing that trend. So that's good to know that CCON is capturing that. Now, let's shift and talk about commission-free ETF trading, which is a relatively new trend. And you take a look at all the big brokerage platforms from Fidelity to Schwab. They're now offering online trades for both stocks and ETFs without any brokerage commissions. And these platforms realize that if they're going to get more assets under management, that this is going to be one of the ways that helps them to do that. And this has been a real benefit for individual investors and traders not to have to pay trading commissions. At the same time, it's important for all of us to be disciplined. Talk a little bit more about that.
Yeah, I think at the highest level, even a few years ago, it would have been crazy to think about not paying commissions to purchase individual stocks or ETFs. But we know those barriers to entry has come down, which is really beneficial for investors, particularly younger ones who are just beginning their investment journey, whether it's saving for a house, a car, or their retirement. But to your point, just because we can trade for free doesn't mean we should. And really what I like to think about with the commission free, whether it's my personal assets or just when talking to our clients, is that we can actually now think about building more robust portfolios. So we know we actually can build long-term portfolios that it's actually really frictionless to build those positions over the long run. But then if I do want to have my pocket to be more trading oriented, be more active oriented, however you want to think about that, that's beneficial too. But don't let that active portfolio overwhelm the long-term goals would be my biggest piece of advice.
Yeah. So what I'm hearing is then the low frequency trading, right? To let that complement maybe the more active or high frequency trading portion of the portfolio.
Correct.
Yes. Good advice. So we're going to finish off with this last question to talk about defensive-minded investors. There's still some of us left, by the way. I don't know how many, but the ones that might be skeptical about the rise in the broader stock market, and maybe they're not skeptical, but they're maybe just looking for a more defensive way to invest. You have the Direction Flight to Safety ETF, that's ticker symbol FLYT. So how might this particular ETF fit into a person's or an advisor's model portfolio?
Yeah, FLYT is really constructed to be a long-term hedge. And what do I mean by that? It means it's intended to provide investors with capital appreciation, but also be there when you need it. It's really was created in reaction to behavioral biases that I have. So I first started investing small amounts of money during the tech bubble, and then more so in the global financial crisis. And I had the tendency to do the wrong thing. But three assets in club.
Join the club of all the we're all part of this same club, Dave. It's not an exclusive club too, by the way.
No,
you can join.
I think it means what to your point is, as investors, we're humans. But if you look at the research, everyone's going to throw new ideas at you. This is going to be the best hedge here, this and that. But if you look at three different assets, utility stocks, long-term treasuries, and gold bullion, so physical gold, when you combine those three together in a portfolio as part of a broader portfolio, it can be that long-term ballast. It also pays you a bit of an income stream. In this day and age, it is low, but it's something. But why is that important? It's because oftentimes we think about hedges as being costly, always underperforming. But when you have some assets in that hedge part of your portfolio that does have the potential for long-term capital appreciation, you're not going to sell that hedge at just the wrong time, and it's going to be there when you need it, like we saw during this year or other periods of market volatility. So I really like FLYT for that purpose as a diversifier as part of a broader stock and bond portfolio.
Well, very good. We're going to have to leave it there. Dave, thanks for dropping by. We appreciate your timely insights. Keep up the great work.
Thank you.
I'm DeLegge with ETF Guide. Thanks for watching. We'll catch you next time.